Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to be going through some live mortgage rates. Then, we're going to be doing a deep dive into manufactured home loans. Give us just a moment here to go live on all the different platforms, and then we will go ahead and get it started. We got the chat up on the screen there. Feel free to drop a comment there in the chat as you tune in. And it looks like we're live on all the platforms, so we'll go ahead and get started. We'll take the chat off the screen for now, but go ahead and keep dropping comments there in the chat. You can also drop any questions you have in the chat, and after we go through the presentation here, we'd be more than happy to answer any questions. So, with that being said, let's go ahead and get started. 1 second here. Okay. All right. Welcome. Oh, sorry, got that. Okay, welcome everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, joined here by our CSO, Jose Gonzalez. We are a lender that specializes in non-QM loans, and what we do every morning at 11 a.m. Eastern on this show is go through our live mortgage rates, and then we do a deep dive into a different loan type. Today's loan type is going to be manufactured home loan. So a lot of confusion about manufactured homes. So Jose will clear some of that up for us, and then we'll go through some pricing for those. But first, let me go ahead and share my screen here, and then we will get into it. One moment here. Just got to pull up the other screen. And all right. So what we're going to do here is go through a typical scenario, $500,000 purchase, $400,000 loan amount, credit of 760. So pretty basic scenario here for all of these. Now, first rate we're looking at here is a 30-year conventional. This is the rate that most people think of, or excuse me, the program most people think of when they think of a mortgage, right? So right now coming in at 5.875, final APR 6.183 with the fees. So that is the conventional rates for today. Now, if for any reason they can't qualify for a conventional loan, the next stop is usually a FHA loan, which today 5.125 is the rate, and final APR with the upfront funding fee and mortgage insurance. It included is the APR is 6.064 there. Now, VA loans here, definitely amazing program, only for our active military and veterans. And you can see here, amazing rate, and especially with the APR, right? Because the rate is great, but with it does not have the typical the mortgage insurance premium that FHA does. So VA 5.25%, final APR 5.542%. Now, another great program here, USDA, obviously amazing low rate here, but it's only for USDA eligible property. So in rural areas, typically you'll see the USDA properties there available. So it does have to be in there, but 5.125% is the rate today. Final APR of 5.8675 with all of the fees. Now, moving on here to alt doc. So this wraps it up for the programs that any typical lender or bank would have. But if they do not qualify for any of these typical programs, that's where we come in with the 5,000 non-QM loan programs that we have, where typically another bank or lender may have to deny that customer. We have 5,000 loan programs to help them out on the non-QM side. So you'll see here this 30-year fixed non-QM alt doc. This is a bank statement program or similar bank statement profit and loss program here. Now, notice the interest rate's obviously a little bit higher, but you can qualify borrowers who would not otherwise qualify for. So 6.375% here as the rate today. APR after the fees coming in at 6.707. Now, 30-year non-QM alt doc. So again, investment property here, right? That we can do alternative documentation such as bank statements, all the non-QM programs here, profit and loss. You'll see here that this is probably a bank statement loan here or similar, coming in at 6.875%, final APR 7.3% for an investment property, non-QM alt doc. 30-year fixed conventional investment here. Notice 6.75 is the rate and 7.095% is the final APR with all the fees. So notice a 30-year conventional investment only slightly cheaper than an alt doc investment, which is amazing. But here's what's even more amazing. A 30-year fixed DSCR. So our DSCR program is for investment properties where we do not use any income verification or employment verification from the borrower. It's based simply on the debt service coverage ratio. Does the rent cover the principal, interest, taxes, and homeowners insurance, homeowners association, if applicable, right? So amazing program here. No income, no employment verification, investment property coming in lower than a 30-year fixed conventional investment. Only 6.5% here with our 30-year fixed DSCR investment property, 3-year prepay penalty, and looks like a slightly cheaper APR here for if we choose a 5-year prepayment penalty. So amazing programs here for DSCR. And if we choose not to have a prepayment penalty on a DSCR, we're looking at 6.99% and APR 7.429 here for a no prepayment penalty. Now, a couple other amazing programs we have here are our second mortgages. So a lot of people have a great interest rate on their first mortgage right now because they may have refinanced or purchased when the rates were amazing. So they might not want to touch that first mortgage. In that case, instead of a HELOC, a home equity line of credit, we can actually do a fixed rate second mortgage. So you'll see here, fixed rate second mortgage on a primary residence is 8.375%. Final APR is 8.8% there. And then this is really amazing here, a 30-year fixed second mortgage on an investment property, 9.75%, final APR 9.995%. And we can do non-QM options on these second mortgages, such as bank statements, so different alternative income options. So great rates there here for today. Let me go ahead and stop sharing my screen here, and I'm going to go ahead and turn it over to Jose, and we will let Jose get into today's topic, which is going to be manufactured homes. So let me go ahead and hand it over to Jose. Go ahead, Jose.
Good morning, everybody. Thank you for joining us for today's episodes of Daily Mortgage Rates Live with the Mortgage Calculator. Manufactured home, definitely a fast-growing segment of lending, basically brought upon by tighter inventory, borrowers searching for additional options, and also due to the affordability crunch, as manufactured homes do tend to be lower in price than site-built homes. But there are some challenges because not every loan option is applicable for a manufactured home. But most importantly, please be aware to make sure that you understand what exactly is a manufactured home and what it isn't. Most people confuse manufactured home with mobile home, especially our MLOs when asking for guidance on manufactured home loans tend to reach out and ask about a mobile home, thinking that a mobile home and a manufactured home are the same thing, and they are not. A mobile home looks like a manufactured home, but has not transitioned yet from being basically a glorified vehicle or a glorified trailer. Right? Mobile home is not permanently attached to any land that is associated with the structure as real property. It has not transitioned to being a manufactured home, and it does not, and there is no affidavit of a fixture, which is the document that certifies that this mobile home has been permanently attached to real property and is now real estate and no longer a trailer, so to speak, right? The wheels have been removed. It's permanently affixed to the land via a foundation, and you can now search for it online in public records, and it will come up like any other uh, real estate will. And it'll state that structure type is manufactured housing. So please be aware that what is a manufactured home and what is a mobile home, because the financing that we're going over now is for manufactured homes that have real estate associated with the structure, and not for mobile homes, which is basically sitting in a trailer park paying lot rent. So let's go ahead and share our options today. I guess we'd call these our affordability busters, right? Or non-affordability busters. Let me see if I can make this a little bigger. I think that's about as big as we can get it. Okay. So our first option here is for USDA homes. Now, this is a match made in heaven, as you're going to see from the pricing. Now, USDA is already 100% financing, and obviously USDA, by the nature of the product, is a rural loan option, and manufactured homes tend to be more prevalent in rural type areas. So now the pricing we're seeing here is absolutely smoking, because look at that. We have 6.75 with a lender credit of 1.35 points. I mean, you could get this deal at that interest rate and possibly cover half or most of your closing costs, depending on what part of the country you're in, cost of insurance, cost of taxes, which are in some parts of the country half of your costs, like in South Florida. So 6.75 with a lender credit of 1.35, lowest cost option, and you can buy that down all the way to 5.5% at a cost of 2.5 points. That's for our 100% LTV USDA option for manufactured homes. Now, VA is another 100% LTV option. Pricing is good, but not as good at the upper end of the spectrum. As you can see, 6.75 is costing 0.199 points versus USDA that was giving us a lender credit of 1.35 points. But as you buy down the rate, they're very similar. 5.5% is costing 2.574, very similar to the USDA option on the low end of the spectrum. Now, FHA, 3.5% down option still available for manufactured homes. And look at those rates, 6.25 at par. And you can buy that down all the way to an extremely low 5.25% at a cost of 2.375 points for our 96.5% LTV financing FHA manufactured home purchase. Now, this is our conventional option. This one is with 3% down. So I set this one up for first-time home buyers. And this one uses the Manufactured Home Advantage, also known as MH Advantage program option for manufactured homes, which requires a manufactured home to be newer. I believe it's either 1990 or 1991 year built. So if your manufactured home is of a newer variety, then it would qualify for the manufactured home advantage option, which has about a 1 point lower cost to the rate. So this one at a 97% LTV, very good option. 6.99 actually has a lender credit of 0.125. That is our lowest rate option. And you can buy that down all the way to 5.875 at a cost of 2.5 points for our 97% LTV conventional manufactured home advantage option. Now for our affordable option, this one, Home Ready. You have Home Ready, which is a Fannie Mae affordable product, and then you have Home Possible, which is the Freddie Mac affordable option, which requires the property to be in an area of where the borrower is no more than 80% or below the area median income. Now, if the borrower's income is above 80% of the area median income, if you run it through the AMI geocoder and it comes up that it's in a low to moderate income census tract or a minority census tract, then it still qualifies without any income limitations, which is amazing. And 6.624 is our lowest cost option with a lender credit of 0.125 and 5.75 extremely lowest rate option at a cost of 2.375. And our last two options here, I was saving the best for last. Yes, at the mortgage calculator, we do have DSCR option for manufactured home. Now, this is like the unicorn out there for the investors, especially because one of the positive attributes of manufactured home is a high ROI, a high rate of return on your investment, right? Which is mainly means you have a low price compared to the rental income that is being generated by the property, because it turns out the rental income is going to be pretty similar to another property with similar square footage and bedroom and bath count and location. There's not going to be much of a difference for renters when it's a manufactured home versus a site-built home, if it's in the same area and square footage and bedroom and bath count that they're looking for. Maybe $100, maybe $200 difference. That's it. So the ROI ends up being very high. That's why investors love manufactured homes as investment properties. And when they can combine that with a DSCR purchase, that is a win-win situation, especially at these rates when you're looking at 7.875 lowest cost option at par, and you can buy that down all the way to 6.375. That is extremely low for our lowest cost option for our 70% LTV, 30% down manufactured home purchase. And our last option now is our manufactured home refinance with DSCR, again 70% LTV. So the LTV does not change when it's a refi, cash out refi versus a purchase. Normally it's 5% lower when you go to the refi versus a purchase. So great scenario here. And look at the rates. 8.375 is our lowest cost option at par, and you can buy that down all the way to an extremely low 6.49 at a cost of 3.475 points for our manufactured home DSCR cash out refi, 70% LTV. So definitely look to the mortgage calculator for all your manufactured home loan needs, non-QM and agency.
All right. Thank you, Jose. I don't see any actual questions, so I think we'll go ahead and wrap it up here. Remember that we do this show every weekday at 11 a.m. Eastern, where we go through our live rates and then do a deep dive into a different loan type. So we will be back tomorrow with a new loan type. We appreciate everybody tuning in. We'll see you tomorrow.